Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 8th of October 2022. We're publishing our gold and silver weekly update for the week ending the 7th of October. Now before we do that, I've been suffering from quite a strong COVID infection, and so I shall keep this video as short as is practicable, as I only got out of bed today to produce this video. I've endured this past week with severe headaches, aches, shivers, sore throat and constant coughing, which has been most unpleasant indeed, and hopefully will pass in the days to come. Enough about me. Let's take a look at what's been happening with our very valuable precious metals. Gold rose $34 last week, rising from $1,661 to $1,695, having hit a high of $1,729 and a low of $1,660, a rise of 2%. In sterling terms, gold finished the week at £1,529, that's up £40, and in euros it closed at €1,740, that's up €45. Silver rose $1.12, rising from 1904 to 2016, having hit a high of 21.27 and a low of 1908, a rise of 5.9%, almost 3 times that of gold, in percentage terms. In sterling terms, silver closed at £18.19, that's up £1.12, and in euros it closed at 20.71 euros, that's up 1.27 euros. The gold to silver ratio fell from 87.2 to 1 to 84 to 1. Now looking at the prediction we made last week, we stated we expect to see gold trade between 16 and 1700, with 1550 and 1725 as outliers, and we forecast silver to trade between $17.75 and $19.75. with 1725 and 2025 as outliers. Well, gold traded within our outlier range, saved by $4 for a moment, and closed within our normal trading range, though admittedly near the top end of it. Silver closed within our outlier range, but did trade outside that outlier range on Tuesday to the high. Now the difference between gold's high and low was $69. And the difference between silver's high and low was $2.19, much higher than the previous week's differences of between $1.13 and $1.32. That has tended to be the difference between highs and lows in recent weeks, so it's almost double that. Now we should go into these prices a little later in the video, but some of our subscribers have asked us if we could tighten the predicted margins. Well, this past week was a good example as why we shouldn't. We believe that our predictive margins are pretty tight anyway, running around 6% for our normal trading range and 10% for our outlier range, that's for gold, and roughly 10% maximum for silver with an outlier range no more than 15%. We're not here to actually advise people for day trading. Gold and silver investment, as far as we are concerned, is a long-term proposition. On those occasions when we expect little volatility due to lack of economic data or geopolitical tension, then we do tighten these quite considerably. However, we did anticipate that last week would be more likely to be volatile, which it has been. And in those circumstances, we have to widen the spread, and even then, albeit for a day, the price of silver in particular actually moved outside even that slightly widened spread. Now, we shall cover more on this after we've looked at other financials. Bitcoin currently stands at $19,491. That's up 162 on the week. Equities strengthened quite strongly until Friday. The Dow Jones closed on Friday at 29,296, down 630 points, but still up 571 on the week. The S&P 500 closed at 3,639, down 104 on the day, but up 54 on the week. And the Nasdaq Composite closed at 10,652, down 420 points on Friday, but up 77 on the week. Oils were much higher this week, reversing a rather encouraging downtrend. Brent crude closed at $97.92, up $12.78. And WTI crude closed at $92.64, up $13.15 on the week. The dollar index stands at 112.79, that's up 0.68 points on the week. Early last Tuesday, that's Tuesday the 4th, it fell as low as 110.06, which was when we saw the considerable rise in gold and silver prices. Let's now take a look at the economic data announced last week and the important, in fact very important data to be announced this coming week, especially on Thursday and Friday. Well, if we take a look at the economic data announced last week, we can see, for example, that on Monday the manufacturing PMIs came out, and the S&P manufacturing PMI was stronger than anticipated, but the ISM one was slightly weaker. On Tuesday we had factory orders coming in at 0%, which was as anticipated. And on Wednesday we had the ADP employment report, which was slightly higher than anticipated. The services PMI were very marginally higher than what was being predicted. But of course, as we pointed out last week, the important data was Friday. Thursday initial jobless claims actually rose for the week. However, the non-farm payrolls on the surface looked weaker, with the figures coming in at 263,000 for September against 315 in August and against expectations of 275. However, the Federal Reserve was certainly hoping for even lower non-farm payrolls. Why? Because they are out to combat inflation. By raising rates, they were not expecting such a robust, still robust, economic environment. With the unemployment rate being at 3.5%, which was considerably lower than what the markets and certainly the Federal Reserve was expecting, then at least in academic terms, if nothing else, it suggests that the economy is still incredibly robust and that quite likely further interest rate rises will be necessary to seriously dampen down the potential of combating inflation. Otherwise, the inflationary cycle will continue to go out of control. Now, looking at this coming week, we have on Monday nothing scheduled because of Columbus Day. Tuesday, small firms business index. Wednesday, producer price index for September, and the FOMC minutes, which will attract a fair bit of attention. But we have to bear in mind there is, unless there's an emergency one, and we don't see that, but there is no FOMC meeting planned for October. We have to wait for November. And the most important data coming out next week will be Thursday and Friday, Thursday particularly with the CPI figures. And it is this that is going to a large extent dictate what both the US dollar is going to do and therefore gold and silver and other commodity prices. And then on Friday we have retail sales, which also are quite important and will support perhaps the fact that the economy is still rising too fast as far as the Fed is concerned. Well, last week we stated that the non-farm payrolls were the one to watch, and so it's proven. And next week we believe the CPI data on Thursday is even more important. Gold and silver price rises did surprise us a little at the beginning of the week. Small rise would not have surprised us, as we have no FOMC meeting this month, and so there was the potential for the dollar to weaken a little and commodities to rise. But in fairness, Monday and Tuesday we saw a fair rise for our favourite two precious metals. And apart from the dollar weakness, which was also increased by the uncertainty vis-à-vis Russia, and many spokespeople having stated that the prospect of nuclear weapons being used in the not-too-distant future was becoming a more serious reality. And geopolitics is something we cannot ignore. Silver touched our $21 level, albeit briefly, and should it have moved on to 22, then the trend will have turned. We're now expecting, however, both gold and silver to continue their descent as the dollar strengthens further. There's not going to be a straight line down to $1,500 gold and $15 silver, but this is where we actually see it heading, especially if the CPI figures next week are elevated. Ironically, the situation in Ukraine is actually helping to support precious metal prices. So with this in mind, and to finish this video as quickly as we can, we expect to see gold trade between 1630 and 1730, with 1600 and 1750 as outliers, and we forecast silver to trade between $19 and $21, with 18 and 21.50 as outliers. What do you think? Do share your thoughts. We'll repeat this video again tomorrow, but under a different thumbnail. Meanwhile, thank you for listening. Please subscribe to the channel if you haven't done so. Press the bell sign. Have a great, safe, enjoyable weekend and prosperous week ahead. And it's back to bed for me. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.